everyone, and welcome to our webinar, The Gold Standard of Wealth Management, Redefining Investor Data Needs. I'm Wendy Spires, Head of Research at Wealth Briefing, and I'll be your moderator for today. We have a great panel of speakers with us, and I think it'd be nice if everyone very briefly introduced themselves, and I'll start us off. I lead the research program at the Wealth Briefing Group while also working as a consultant for wealth managers and wealth tech firms. My particular specialisms are the client experience and communications, so obviously I'm super interested in what our panellists have to say today. So now to our panel. Leslie, could you start us off with an introduction, please?
Yes, and good morning. So I'm Leslie Gent, and I head up responsible investing at Coutts. Coutts is a wealth manager based in the UK, and my title pretty much says what I focus on. It is really much focused on responsible investing and ESG incorporation in our portfolios.
Great. Giovanni?
Yes, I'm Giovanni Lietti, working for Avaloq. That is one of the prominent wealth management solution. I'm personally working for private banking and wealth managers since many years in different companies. And I am also responsible of the ESG evolution in the wealth management area in my company, in Avaloq, currently.
Great. Thank you. And finally, Steve.
Good evening, everyone from Singapore. My name is Stephen Carroll. I am the Head of Market Development for our Wealth Solutions business at Refinitiv. So effectively that is looking at the offering that we have today and making sure that it's future-proof in light of all of the differing trends that are underway, some accelerated, some slowing down as a result of the pandemic, and looking a little further out than that.
Thank you. Okay, now just some very brief housekeeping. This is not a dial-in webinar, but we will be taking questions throughout via the Q&A box. We'll tackle those as we go or at the end as appropriate. So please do ask questions as we want to be as interactive as possible. We'll also be carrying out a few polls and I urge you to take part in those. Okay, so introductions and housekeeping complete. Let's dive into our discussion. I'd like to start us off first of all with a quick audience poll, which you should see on the screen right now. So the question is, how well on a 1 to 100 scale do you think your firm's investment communications actually helps clients to make better investment decisions? We'll leave that running just for a few moments while we start our first point of discussion. So trading frequency has really accelerated during the pandemic for a host of reasons, and Refinitiv's research seems to indicate rapid shifts in clients' thinking too. But at the same time, investors are saying that they lack the data and content that really makes them make informed decisions around their investments. In fact, Refinitiv's study that we're discussing today put that poorly equipped cohort at 39% of the entire sample. So at a high level, what kind of data and content do you think investors are crying out for most? Is it macro global, asset class, market specific, or maybe even more granular as to actual individual securities? Leslie, what can you say about information overload and the need to have detail when needed, but an overview as well?
Yeah, I think that's exactly the challenge, is getting the balance right. I think the experience that we've seen with our client base is that too much information often leads to indecision. So it really is about getting the balance right, and making sure that that material information is available and that the data and noise doesn't distract investors from actually making decisions. Your point on, what is the most important data, I think it's more just how you layer it. So start with important information that's relevant for all investors, macro, what's going on in the economy, valuations. And then for those investors that are much more interested in the detail, make that easily accessible so that they can dip in. But at the same time, if you put that data right up front, you're going to scare a lot of investors away from making decisions.
Yeah, for sure. Giovanni, what can you say about what banks and wealth managers are expressing interest in on behalf of their clients?
Yes, let's say as a software solution provider, we, of course, feel the pressure on banks and asset managers to deliver more complete, in principle, also today non-financial data and real-time information to the clients at the right moment and for the right kind of users. This means non-predefined information delivery, but data to be discussed in the interaction that currently is essentially virtual. There are also other, let's say this is in particular the way in case of self-servicing. For example, robo-advisory for mass affluent clients, that is a real trend at the moment. Self-service will be growing because of the use of new technology like artificial intelligence, and if it is of paramount importance to make available in the right way the broadest information at the time when it has to be consumed by each type of user. So each type of user should have his own user experience and the data prepared for the moment of the decision that he is going.
And Steve, does that match with your experience from what you're hearing around the world from wealth managers?
So I would say it's a very interesting question because, you know, we're asking about investors here, but there are quite distinct types of investors. If we look at the survey results, between 10 and 12% of European investors self-identify as traders, and obviously the balance, the 88 to 90%, are much slower and self-categorize as investors. And I think the industry overall does a very good job of enabling the kind of the higher frequency, the traders, the more experienced cohort. But when you look at how we provide context and education to enable them to make good use of company data, of macroeconomic data, of sentiment data, and all of the various other types of data that's available, I think there's significant room for improvement. So I don't think there's a single way to answer the question in terms of what people are looking for. It's a function of their own investment sophistication. And I think we're doing a pretty strong job with the group that provides most of the funding to the industry, but moving that less experienced cohort or less confident cohort along the spectrum of being willing to trade, to increase their trading frequency, etc., there's work left to do.
So as with so much in wealth management, segmentation is key. Okay, I'd like to go back to the results of our first poll, if we may. So, yeah, very mixed picture there, although I think average to okay is probably what most people are saying in terms of how much the information they provide helps people actually make decisions, and seeing quite a few people who don't really give their firm a good score at all, although nearly 10% saying that they are very, very good at this. So that's nice to see. Okay, so moving on and continuing with the segmentation theme, looking at Refinitiv's study, I found it really interesting that, for instance, Hong Kongers say that they're missing out on webinars the most, whereas in the US, UK and Switzerland, they are more looking for long-form investment content that's more maybe institutional in style. What do the panel attribute these regional differences to? Leslie, what can you say? I know that you've been out in Asia.
Yeah, admittedly a few years ago, so things may well have changed. But yeah, my experience with Asian investors is they did tend to be more sophisticated, had a more trading mentality. And so they were very much interested in technical information. Their knowledge often rivaled professionals. So there was a frequency of information that they were looking for that was considerably higher, for example, than we see with investors in the UK. I often think that that's attributed to the growth rates that we've seen in Asian markets. It is sort of more opportunistic, and I think it does, in a sense, validate that sort of trading mentality.
Interesting. So, Giovanni, do you see in your work with banks and wealth managers and all the kinds of firms in this space that they really do regionalise their communications and content strategies according to the markets that they're serving? Giovanni?
Excuse me, I was on mute. Yes, there is definitely a difference between the regions around the world. We are currently active in Far East, in Asia, and in Europe, essentially. And I think the Far East investor is much more let's say, sophisticated in the type of assets that he wants to deal with, while the European regions is more for, let's say, for the typical advisory and managed mandates business is directed more on this.
Mm-hmm. And Steve, what can you say about the consumption of content and preferences, long form, webinar, podcast maybe?
Yeah, I would ascribe it to the largely to the ways in which those markets operate. And what I mean by that is the Asian markets tend to be much more macro sensitive, and so a buy and hold strategy in the Asian markets over the last 20 or 30 years would have seen some kind of jaw-dropping dips and significantly greater volatility that you would get in either the US or Europe, where domestic consumption plays a much bigger role in the indexes. So a buy and hold strategy in Asia is less successful, or I guess removes the opportunity to add quite a lot of alpha in terms of timing. So I would say that Asian investors are to some degree just reacting to what the markets in front of them are doing, which is a lot more volatile than what retail or institutional investors have to deal with in Western Europe and in North America. So as a result of that, there's much more interest in kind of topical, short-term information because timing is just more important.
That's a really interesting point. Okay, so turning back again to the findings of the study, we see that across the board, investors are rating the data and content they do get as not insightful or useful in a lot of cases. And in fact, across all channels, there's a big contingent saying that they have access to a plethora of resources, but they don't actually use them. What, in a nutshell, do we think is going wrong here? Leslie, what do you think is going wrong?
Well, in a nutshell, I think it's the context that often isn't provided. A data point on its own isn't very useful. So you need to provide that context for investors to help them, again, understand the data and determine whether it's relevant or not relevant in their investment decision making. So it really is, it's kind of the background, it's the knowledge piece behind the information that I think is absolutely critical. The two need to go together.
Mm-hmm. Steve, what did you take from the research on this point that people have access to a lot of resources but simply don't use them?
Well, I think it's probably quite a stretch to ever assume that everyone's going to use everything. So, if you have a trading mentality, you might find short-term news and sentiment indicators to be much more important. Timing doesn't matter if you buy and hold for the next 5 years. So, I think the challenge for wealth providers is they need to offer a very broad array of content types, valuation, another thing that's not very useful from a short-term perspective. So I don't think wealth managers should be overly concerned about the statement as long as they offer the breadth of content capabilities that meet all the different types of investor requirements, from a short-term trader, options trader, through to a long-term ETF or mutual fund investor.
Okay. And Giovanni, can you tell us anything about the user journey points that you're seeing from wealth managers and how to make sure?
Yes, I think I agree totally with what Leslie said before. The fact is that the data content is related and non-insightful or useful, maybe due to the fact that the consumption of a big mass of data as the one available today must be organized in a useful user journey. The amount of data today available is not manageable by a human brain. This is clear. And if it's not organized for the objective to be reached and for the type of user. Only making data available without process and application focuses on these user prototypes is only noise, as already mentioned. And the user will spend more time to find the right data to work with instead of using them to take investment decisions. So we needed to provide the right data at the right time to the right user. That's the point. And this means that the applications should be tailored for the different user types.
Yes, okay. So we've had a question in. We've spoken about Western markets and Asia, but one of our attendees is asking about preferences in the Middle East. Steve, can you tell us about anything Refinitiv is seeing on that front?
So I would say that, you know, the Middle East is a good example of a market where some of the newer content sets and some of the alternative data content sets can bring a lot of value. You know, the Middle East, for example, you know, there's a heavy interest in oil or in energy more broadly, and these types of content sets have really evolved significantly in recent years. You know, the ability to kind of forecast Western demand and things like that are going to shape the oil price, shape the therefore the budgets of the regional governments. All of that type of thing has really evolved significantly. And so from an alternative data perspective, there's a lot of opportunity to really drill into different industries. You know, another example is tourism, and provide data that just didn't exist 4 or 5 years ago. We've seen through the COVID lockdown, you know, for alternative data, people measuring how much travel or footfall you're getting in different stores. All of this type of alternative data provides huge opportunities to just be smarter and have a better insight into where the oil price is going to go in the future. And of course, that's an industry in transition with hybrid and electric. So there's a lot of interesting angles here. And I've kind of chosen to answer the question through a commodities and energy lens, but I could have chosen, you know, tourism as another important consideration in some of the Middle Eastern markets. I think that's where the data differences probably come to the fore a little.
And that's quite an interesting point in relation to the democratization of investing, because that's the kind of stuff that you typically associate with being only available to hedge funds, isn't it?
Yeah, that was certainly true 5 years ago. I think that the availability of those data types is really evolving. And, you know, a cynic might say as the alpha gets squeezed out of those content sets, they become more available to less wealthy purchasers. But yes, certainly I agree that there's a lot more variety of alternative data available and available for redistribution use cases than there was in the past.
Yeah, and that's got to be good news that there's a kind of more level playing field for the mass affluent and regular high net worth investor, if you can say such a thing. Okay, so I'd like to run our second poll at this point. So the question is, again, on a 1 to 100 scale, how well do you think your firm differentiates itself through its investment communications and data? We'll leave that running again while we start on our next point of discussion. So, you know, we've touched on some of these points now, but I'd like to really get down to what people think they would do in a blank piece of paper scenario. What are the ingredients for a strong data and content recipe if you were perhaps starting a new firm, and how would you tweak that recipe depending on the segments that you are serving? Leslie, how would you start? What's the prescription? For data and content.
I love having a blank piece of paper. It never really happens in real life, but yeah, it's a good place to start the thinking. I mean, it all starts with your target market, right? You need to understand who it is you're trying to communicate with and what it is they want to know. So you really, that has to be your starting point, is understanding the end investor, their preferences, and how they want to be communicated with. And then you build it around that. So it's always going back to to the basics and the demand side of the picture. This idea of tweaking it for different segments, it absolutely has to be dynamic. I mean, I think this has been mentioned many times already on the call, this idea that there are different investor types. You have to be aware of that. And, so that means one size does not fit all. So there has to be this ability to, in a sense, customize the data for the investor. And I think, where technology is today, that's absolutely achievable. And it is easier, as you say, when you have a blank piece of paper, not necessarily as easy for businesses already operating with their current infrastructure. But that sort of customized information experience, I think is really interesting.
Mm-hmm. So, Steve, one thing I hear more and more from wealth managers and indeed wealth techs is that the technology firms are taking on an almost consultative role and helping institutions to formulate their recipes. Does that align with your experience at Refinitiv?
Yeah, to some degree. Yeah, I would say that, wealth managers are always looking to improve the digital experience that they offer. And the content is definitely a component of that. I would say that there are other components that are also just as important, certainly getting the navigation and overall user interface and broader user experience right is just as important. So there are a few pillars that you need to get right in order for this to work. But if you don't have the content, that's obviously a poor starting point.
Mm-hmm. And Giovanni, can you maybe tell us about how to look at each individual client type, maybe through personas, and how to formulate the recipe that way?
Yes. This is exactly what we said before, that the fact that we have to look to each user prototype, or what we named personas, to have a specific user experience and application that apply to him to be effective. We can think, for example, starting for the end client, that already there are different personas, like, for example, private client affluents, corporate clients. And then from the front of the financial institution, persona like the advisor, the external asset managers, the chief investment officer, and then the support function like assistant of the relationship manager, the portfolio manager, the investment manager. These have to be served specifically. And serve specifically means also mimicking the human behavior. That is not always one way, single thread, as most of the software people love, but it is very often multi-thread with the jump back and forth. So for all these type of persona, you have to tailor this user experience and process in the way it is most natural for them.
That's a really important point about the various professional clients and external asset managers. That's a very interesting segment to me. Okay, let's go back to our poll results and see how well people think that their firms are differentiating themselves with their data and content. Okay, actually, quite a lot of people think that their firms are doing well on this front, so that's really great to see. However, none in the absolutely excellent end of things at the moment. So, as Steve and Giovanni have said, always room to improve. Okay, so let's move on to a massive story that's driving the industry now, which is, of course, ESG. Refinitiv study found that just over a third of investors globally said that they're more interested in ESG than they were even 6 to 12 months ago. And you could possibly argue that the industry has a moral duty to further fuel this trend. How should the industry respond on the data and content front? So, Leslie, I'd like to start with you. So Coutts has been given an excellent A+ rating by the Principles for Responsible Investment. for the way it's adopted ESG. How is Coutts going above and beyond on the data and content front here?
Yeah, so I mean, this is for me where data comes to life, because there are lots of challenges with ESG data. Not to mention that we have regulation in Europe requiring us to publish certain data points, and in many cases those data points don't exist, or the data has significant lags, or it's based on assumptions. So it doesn't mean you can't use the data. It means you do need to spend a little bit more time understanding it, understanding all the assumptions behind it, before you kind of draw your conclusions. So, yeah, I think the data and the evolution of data and how the industry, I mean, moving at incredible pace to pull this data together, it's interesting to watch. You know, just talking about the regulation for a bit, when it was first proposed, I remember looking at it saying, well, this is impossible. You know, aside from one data point, I don't have credible data for the other. At that point, I think there were over 40 data points that were required to be reported on. But interestingly now, sort of two and a half years later, that data is there. It's still not great, but it is available, and as long as you understand it, you are in a position to start using it in your investment decision making. So there's lots going on in this space, but I'll pause to let others also add their thoughts.
Okay, Steve, what can you say about how tech firms and data providers are helping to drive the ESG agenda?
Yeah, I think the duty is to acknowledge that there are going to be different kind of appetites for complexity and granularity in this data, and you know, for the professional investor, you know, we offer over 400 different data points that can provide a great deal of specificity. On the other hand, we also have scores that make it very simple for a man or woman in the street to determine, you know, is there anything in my portfolio that's a red flag that I should think twice about as I adopt or believe ESG is a more important consideration. So, you know, we're attempting to meet quite diverse needs and produce analytics that can equally support a kind of institutional asset management use case or a professional wealth use case, private banking, while also at the other end of the spectrum not confusing those retail investors who have less appetite for that type of detail.
Mm-hmm. And Giovanni, what can you say, perhaps specifically in a European context? I know that we have a slide coming up just now that will help to explain your approach.
Yes. First of all, I think there is by surely a need of the standardization of the whole information value chain. So from the invested company till the investing person of entity. And this, I think it should increase significance, comparability, and try to avoid the greenwashing in this area. Global standard setters are, of course, should be in the lead, and the regulation should develop coherent control mechanism for this. In our offering for the wealth management world, we distinguish essentially in two parts. Let's say the key part is here represented on the left side, and this is support for the wealth management process. And for this, we have essentially two sources of requirement. One source is the market trends. ESG investment is the mega trends of this nowadays. And on the regulatory side, we have to keep also an eye on what is happening, and in particular, we refer to the MiFID II amendment of the delegated acts related to ESG that has not been yet approved, but will most surely come in the next few months. On the pure compliance side, we offer another package that is related to the compliance with SFDR and taxonomy, and of course, not forgetting that the two services that here are shown should be supported by the same ESG data source, trustworthy, I would say, data source.
Mm-hmm. So ESG is a prime example of how complex things can be. The taxonomy is still developing. Portfolio construction is as much an art as it is a science, I think. And then the reporting is also very complicated and varying from firms to firm. But there are lots of areas that are very, 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 very esoteric. How do firms look to achieve cut-through? Maybe clients aren't very well versed in all of this kind of stuff, and you run the risk otherwise of just completely turning them off. Leslie, how do you make sense of things for clients when things are very complex?
Yeah, again, I think you do need to be careful about language and make sure that you are defining the language that you use. I mean, if we just talk about, all the different terms related to climate change, whether it's I don't know, net zero, Paris aligned, carbon offsetting, each one of these means something slightly different. They all kind of work together. So there is education. But equally, I think we have to acknowledge that our clients, live on this planet and are aware of most of these issues because they're making it to the front page of the daily newspaper, right? So there is more and more sort of knowledge filtering through sort of common media sources. So, we need to acknowledge that when investors come to us to talk about these issues, they're probably coming with a fair amount of passion, and they probably already have some ideas of their own. So I think it's as much about education as it is about listening, trying to understand what their needs are, what they're trying to achieve, but then equally making, I suppose, understanding and explaining what some of those, I always call them constraints, might lead to from an investment outcome perspective. So it is a balancing act. I think it all starts with education, listening, and then it's that clarity and simplicity of language.
Mm-hmm. Steve, what would you like to add on that point of achieving cut-through in highly esoteric areas?
Well, I think Leslie covered it very well. I would just add that, of course, investor objectives here vary widely. At one end you have, simple exclusions saying that, I don't want to invest in arms manufacturing or tobacco, for example. But at the other end, you have impact investing where the investor is willing to take a lower return and is actually, using their capital for kind of positive change. And so there can't be a one-size-fits-all approach. And equally, I agree fully on the point around terminology and education. We're still early in this process, and I think we've got 5+ years before we get kind of international agreement on definitions for a lot of this stuff.
Yeah, for sure. So Giovanni, I think you've got another slide to help us visualize the information value chain. Would you like to take us through that?
Yes, as mentioned before, I think there is this need to increase the standardization in the information value chain and put the right information available at the right moment in the user journey. What we see here is how to integrate an ESG data within a typical investment advisory process. And you see essentially along the process, we have a phase in which we capture the preference, and this in a way that is very similar to the preference of the investor preference that has been done till now. So like the riskiness of the time horizon, etc. And on this basis, then propose and define, let's say, investment hypothesis. And then, please note that this process is circular, so you may come back and go forth many times before to find the right combination for the client. And then there is the important part related to the reporting and control of the investment. We, in particular, we use here quite sophisticated technology, as mentioned, and the integration of ESG has brought a new dimension in this. Artificial intelligence can be also use it, in particular for the support of non-super experienced clients and user in general, because you may expect that not all the relationship manager may have the deep knowledge of the things that have been done here at the right level. Yeah.
Interesting. So moving on to the kind of organisation of information, I don't know if this is something that everyone else is seeing, but in my conversation with clients at least, I'm hearing some really sophisticated weighing up of sectoral trends. So it's not just I need tech in my portfolio, I've got some FANGs and that's it. It's more which tech, which markets, which regulation is coming down the pipe, and they really want to dig in. So to build on earlier questions, would you advocate maybe having sector-specific channels to look at tech, maybe to look at ESG, or do you think it should be treated in a more logical sense as to markets and other ways of looking at portfolios? Leslie, how do you feel about that?
Well, I'm probably going to give two different answers. So, from a Coutts perspective, we tend to look at things from a markets perspective. Clearly, depending on what's going on in markets, there are going to be certain sectors, industries, companies that are of more interest. And we have to respond to that, right? We can't ignore it. Even though we're long-term investors, those sort of spikes in news or spikes in interest, it means that our clients want to know what we're thinking about in those areas. But for us, we are still, I would say, predominantly multi-asset diversified investors. So this sort of more thematic or sectoral approach isn't something that we do a lot of in terms of sort of supporting particular ideas. Just on a personal front, I think the reality is we need to be aware of the demands of investors. Certainly what we've seen this year, it's been very interesting, sort of the rise of the small investors, kind of the crowd investor almost. These are trends that, we have to actually try to understand what's going on. What are the underlying root causes that's sort of driving this thinking and this approach. But yeah, from a Coutts perspective, we're still very focused on sort of diversification and long term. So I think maybe best just to stop and pass it to others who are more knowledgeable in this area.
Okay, Steve, would you advocate whole areas of content and data that's looking at hot sectors and asset classes, or would that be overkill? And also, given that there's only a certain amount of bandwidth that clients and firms have.
Yeah, it's an interesting question. So we don't see at this point that much hunger for sector-specific data, and I think I think that there could be a couple of reasons for that. But if we look in the report, very clearly the two sectors that the investment community are focused on are pharma and tech. Surprise, surprise. and I'm just thinking about the kind of duty of the wealth manager. If you know that the entire market is overweight one or two sectors and valuation looks kind of crazily scary, and the risk is quite asymmetric for a novice or inexperienced investor, particularly if they're getting their investment advice on Reddit. I wonder how you balance the need to kind of educate on diversification and a multi-asset patient capital approach versus meeting the needs of perhaps an investor who's got the blood up and is in the greed phase and not so interested in those longer term requirements. So I don't really know how an investor kind of, how a wealth management firm balances those competing requirements, the hunger for data versus perhaps preventing the investor from self-harm. But it's a topic worthy of its own webinar, I would suggest. Yes,
certainly. Giovanni, anything to add on that point?
No, particularly if we speak of channels, of course, being, let's say, a technological company, we are quite engaged with this. And as mentioned, I would say that we will see in democratizing the wealth management a big growth in the area of self-servicing. This is really the new thing, I think, and self-servicing, of course, meaning a digital channels available to all the end user and the end client of the banks and of the wealth manager in general.
I know from our previous webinar, something that came out that was very interesting to me was the approach of having a bite, a snack and a meal on various subjects so that people can really dip in and out as their interest dictates. Okay, moving on to another very current issue. So we've seen the power of internet forums to drive investment behaviour, and social media has long been seen as a source of information that investors should be paying attention to. What are our broad views on these alternative information sources? I know we've touched on this, but I wanted to dig into the fact that a Refinitiv study found that 54% of investors say that news analytics would be something that they'd really like to get more detail on. Leslie, what's the wealth management view on alternative information?
Yeah, I mean, I think these sort of internet forums, they can definitely be interesting and fun for those who kind of have that gamer's instinct, I suppose, for trading. It's just not the same as investing. And, you know, our approach, as I said it before, it's very much long-term. It's looking at the long-term strength of companies and the economy. Yes, it's a bit boring. It's a little bit dull. But at the end of the day, that is actually what we do. So, you know, we do have an obligation. This sort of came up earlier. We're not going to ignore it. We will communicate on it. We will acknowledge what's going on. But, you know, we do, you know, sort of at the end of the day, emphasize what our approach is. So you need to acknowledge that, again, different sort of needs with regards to investing. Some people just want to, dare I say it, have a bit of fun. That is very different from trying to grow your nest egg for retirement. And, you know, it's just, you know, there's just an obligation, I think, to help investors understand what they're trying to achieve and some of the risks associated with various behaviors.
Mm-hmm. So, Steve, you've mentioned various markets where maybe the trading conditions are different and alternative data has, there's more of a hunger for it. Are you seeing a lot of appetite from firms themselves to amalgamate this into their offering?
So certainly from a US perspective,
okay.
I would say yes. I mean, if you look at the ecosystem around alternative data, much of the funding has come from the US, much of the larger aggregators have come from the US. So that's not surprising. But you know, alternative data is a broad term, you know, that I kind of define as data that didn't exist 10 years ago. But I define it as data, you know, so the social media, you know, Reddit, Twitter, crowdsourced ideas, to me, aren't, strictly speaking, alternative data. Alternative data would be the measurement of the sentiment on a forum like that. And so a lot of these areas actually do deliver additional information, you know, looking at shipping volumes or how much people are traveling to the shopping center using satellite data. All of that gives you a better view of the economy than, you know, existing sources do that might be 30, 60 or 90 days kind of look back. So there's real value to alternative data in the investment process. It's just quite difficult from a retail perspective to get the signal to noise ratio right, because the amount of information that's available and the ability to interpret that when you're a part-time investor, I think can be very challenging. But certainly if wealth management firms can offer alternative data sources in a way that puts it in context, makes it relevant to people's portfolios, and gives them a faster view on economic changes, then it's a very important new source of information. But, some of these kind of social media, kind of aggressive trading type data sources, to me, aren't very interesting at all. And in the long term are not going to be alpha generative.
Mm-hmm. Interesting. Okay, can I just urge any people who have got questions burning to send them in. We have got some that we are going to tackle imminently, but we've got plenty of time for others. So we've all been glued to our computer screens on a large format for the past year, but hopefully things will be getting back to normal and we'll be out and about and therefore on our mobile devices. What do we think about the industry's direction in terms of mobile solutions and presenting data and content in that format? Leslie, do you have any thoughts on that, or could you tell us anything about what Coutts is doing on the mobile front?
Yeah, I mean, definitely something that we're focused on, and it's basically you need to serve clients in whatever channel they're looking for, right? So again, it's going back to what does the end investor want? So we're definitely making sure that those channels are up and running and that they're meeting the needs of investors. And I think that's really what the industry is focusing on, is making sure that kind of those old formats still need to stay there, because not everyone necessarily has progressed at the same speed. But we are consuming more and more information, and we're making more and more decisions, on our phones, on our tablets, etc. So it is important that that we're using those channels and that they're effective, right? That the way you consume information on your tablet is different than how you consume information in a face-to-face meeting. So it does need to be dynamic. I've said this before, interactive and very customizable.
Giovanni, I know that Avaloq is very strong on the mobile front, and as regards to advisors being able to look at data on mobile as well as the clients themselves. What can you tell us about the mobile picture at the moment?
Yeah, let's say we, of course, support of the channel, and the idea is to have, also the reality is to have a 24/7, 350 days a year support. And why this? Not only because one may use or may prefer, the client of the bank may prefer to one device or the other, but also to keep contact. So let's say what it is, the relationship management that goes around the wealth management. It is quite appropriate to be implemented in a mobile device, for example, so that not directly may be the investment decision, even if there are also cases of this, is decided via a mobile, but the interaction between the relationship manager and the end client can be done and can be maintained in a very natural way. For us, for example, we use the same technology of WhatsApp. And in order to organize these relationship manager around the wealth management scope, let's say.
It's just struck me that I'm sitting here with two computers, one tablet, and a mobile phone in front of me. So, Steve, what can you say about the device preferences that you see?
Yeah, so there are two pieces here. There's the individual investor piece and the advisor piece. For the individual investor, obviously we've taken a bit of a pause. We're all sitting at home, and I'm not sure everyone has as many devices in front of them as you do. I know that laptop and PC have kind of largely replaced tablet and mobile, unless I'm trying to kind of multitask in front of the TV. But, for the individual investor sitting in Asia, there's very much been an arms race in the past 2 to 3 years to continue to delight the individual investor, to bring them more trading functionality. I think Europe and the United States are probably slightly behind on that front, but we're working on kind of mobile opportunities and mobile post-pandemic mobile solutions in all of our key markets. Where I would say the report calls out perhaps a little bit of dissatisfaction is omni-channel access to the advisor. It's very clear that people want to be able to book an appointment with their advisor via their mobile. They don't want to have to engage with WhatsApp or with email. They want to be able to just kind of quickly select a slot and have it done without, advanced interaction. So feedback in that area was that there's work left to do. And then the final piece is kind of mobile solutions for advisors as they get out and about, as vaccines allow us to travel a bit more and get back into coffee shops and visit clients. And there, that feels, or in 2018-19, that was just a constant area of innovation that we saw, that we were working on, where really empowering the advisor to have a value-added, differentiated conversation with their end customer was an area that I don't think many banks felt they had nailed, and there were huge opportunities for growth. And I think as we come back out of lockdown, particularly in Europe, I think that trend's going to reaccelerate.
Okay, so on to other questions now. So I think one thing that emerged from the study is that podcasts are generally unloved, except in Singapore, which I think is interesting in itself. Throughout the pandemic, podcasts very interesting to people, because I guess they were listening to things while they were out walking, taking their daily exercise. What do we think's going on here? I personally love a podcast. Leslie, do you find them to be popular at Coutts? Have you found them popular in other roles?
Yeah, so we definitely use podcasts as a way to communicate with our clients. I think it's kind of what you've just said. It's a nice way to sort of stay engaged, maybe while you're doing something else, like going for a walk. And I know certainly, being stuck working from home, and all of this kind of screen time that we have, it's kind of nice just to use your ears, and use your eyes to look at what's going on around you. So I think, we've started using podcasts more, but they're just sort of one means to communicate.
Mm-hmm. Steve, what's your view on podcasts and video and all of the multimedia offerings that you might put together?
Yeah, I think getting beyond text is crucial, and particularly for younger investors, they expect to have access to information, through multimedia channels. I think one of the challenges of podcasts specifically is just that it's quite and maybe I'm overgeneralizing, but I find it quite a long form style of information provision. Very few podcasts are 2 to 3 minutes. And what we've seen in a lot of the surveys we've done with customers is they're looking for, using your earlier example, they're looking for bite-sized chunks of information. They might want a 3 or a 5 minute overview of improving their understanding of how to invest in equities or how to screen on mutual funds or what have you. And a 30-minute podcast might be a little bit more than the doctor ordered. It's more of a deep dive medium in my perspective. So I think they have a value, but for an individual investor, using an online broker, I'm not sold that they're kind of a primary communication medium. I'm not surprised that Leslie says they're more used by Coutts.
Yeah. Okay, and that leads us nicely to a question I think we'll have to end on. So are firms themselves doing enough analysis of engagement and usefulness? Refinitiv has given us this fabulous study looking at over 1,000 investors in 9 markets. I certainly haven't seen anything else like it, but yeah, are firms themselves actually looking at what people are using? Leslie, what do you do at Coutts to make sure you're really nailing it?
Yeah, so we have something that's called a sort of client council. So we do regular sort of surveys with our client base just to understand their needs. And the nice thing about that is it's quite flexible, and we can do it in sort of short format, i.e. just send out a couple questions, or we can have it in a much more sort of in-depth, detailed discussion. So that's really how we sort of stay on top of, are we actually meeting client needs? We ask them directly.
Interesting. Giovanni, what can you say on how how firms are assessing? Is that something that you help with Avaloq to show what people are actually engaging with?
Let's say we do not, let's say, support specifically this kind of communication between the client and the banks. What we in particular see is the fact that the multi-channel experience is profitable in terms of announcing new products, and is at every level. And also for us, we use typically webinar that then can be consumed after as a podcast for announcing new feature of our products. I think this is a normal way, and we use quite a small and very short, let's say, podcast to make a generic update of our activity. When it goes in general on the announcement of a new product, we try to invite as many clients as possible in a webinar event, virtual event for the moment, but also physical event that may be then recorded and spread around.
So good practice, obviously, for firms to be researching this themselves, but I'm sure many are finding your report very useful. Steve, is that something that you're seeing reflected in your downloads currently?
Yeah, very much so. We originally considered doing this more focused on high net worth and ultra high net worth, but it was quite clear that understanding that customer segment was a lot more advanced. It was the mass affluent average investor where we were most interested, and where we didn't see a lot of our customers doing this type of analysis. So we chose to focus in on that kind of largest and I guess middle of the road segment, and the information's been very useful, obviously sparking a lot of conversations. And we think it's a really valuable report that we're slicing and dicing a few more. There'll be reports on digital. There'll be reports specifically on the 3 regions: North America, Europe, and Asia. So very likely this will become an annual event.
Fabulous. Well, I would urge anyone who hasn't to definitely read the report, The Gold Standard of Wealth Management, Redefining Investor Data Needs. It covers a huge amount of ground, and we've only just scratched the surface of its insights. So I hope you'll agree that was a really interesting session, which, as I say, covered a huge amount of ground. All that remains is for me to thank all of our speakers today, all of you, our attendees, and Refinitiv for putting on such a thought-provoking session. Thanks so much for attending.
Thank you.
Bye.